Hi, I'm Spenser Villwock. I'm CEO of Independent Electrical Contractors, Rocky Mountain, here in Denver, Colorado. Pleased to be joining Nick Vuolo with Network Insurance Services here today. Nick is a recognized expert in workers' comp insurance. He's here to break down some complex issues. I'm going to have to read this one because it's a bit of a mouthful. Now, Nick, I understand that there's been a lot of changes that the National Council for Compensation Insurance have made to the Experience Rating Plan Primary Excess Split Point Value and Maximum Debit Modification Formula. Huge mouthful. Nick, hopefully you can help to shed some light on this for us today.
Glad to be here, Spencer. I really appreciate the opportunity.
Well, Nick, guessing from the buzz that's really centering around this split point issue, it sounds like it's a pretty big deal.
You know, Spencer, you're exactly right. Since the changes the NCCI has made to the split point rating, it has had significant impact to a lot of our customers, particularly in the construction industry.
What is a split point?
You know, Spencer, that's a great question. And I think even to expand on that a little more, we might even take a step back and talk a little bit about the NCCI experience rating to get a base point. So the experience rating is a mechanism that the NCCI, this is that mouthful, National Council of Compensation Insurance, that puts out for all of the eligible companies in the state or really across the country in most states that they are recognizing the NCCI. What that does is it's a tool that measures companies of like kind so that you can see how you would compare to the national average and the state averages. So the split point and how it relates to that calculation, the split point is where they will delineate between the excess of losses and the primary loss. And again, that sounds so confusing. So if we look at what the experience mod is in its simplest terms, and again, it's pretty complicated, and I think the NCCI does that on purpose. But if we really just boil it down to its essence, it really comes down to it's how many claims you've had over the previous 3 years and how much is being paid on those claims as an amount, and then they take that and they would weigh it against your payroll, which creates premium. And that then creates that ratio, which is your experience mod. Well, when we look at the how much they're charging for those claims, that kind of falls into two categories. And one is for the frequency amount, and the other then becomes the severity. And that's your primary and excess loss. So the primary loss is they're charging you essentially dollar for dollar up to that amount, which is then called the split point. And the split point prior to this change, so for the last 20 plus years, that split point has been $5,000. Effective January 1st of this year, 2013, they've raised that to $10,000. So what we're seeing is, obviously, if you've had some significant claims in the past, you're seeing a pretty significant change to your experience mod because they've doubled how much primary loss or dollar for dollar loss that they're charging you for.
You know, that really helps to make things much more clear, Nick, but it really doesn't sound too terribly positive for the industry. You know, why did they make this change now?
Yeah, it's a great question, Spencer. What the NCCI has come back and told us is they had to. They were forced into making this change right now. They haven't made an adjustment on the split point in over 20 years, and as you can imagine, a dollar today is vastly different than a dollar 20 years ago. Well, as a result, keeping that split point at $5,000, what happened was the experience mods were all starting to lump right around a 1.0. regardless of if you had some large losses or small losses. Well, the idea is that we're trying to differentiate companies and kind of delineate them along a line, people with serious losses and those that haven't had very many losses. So by expanding the split point to 10,000, and another point that we hadn't talked about yet, which is a good idea now, is they've also adjusted a D ratio, which is sort of the balancing factor to that split point. Well, what the D ratio and split point changes make is they grab those folks with the large losses and they'll pull them out to higher mods, and then those individuals that haven't had any losses at all are now eligible, and they pull those guys down to lower potential mods. Now, the reason they've done it now, of course, as I mentioned, is they haven't done it in 20 years, and they were really starting to see a bottleneck on those mods. Personally, we really kind of fought the change happening right now because, as you know, Spencer, dealing with your customers, we're coming out of one of the hardest economic times we've seen, certainly in recent years and quite possibly ever. We felt like this maybe was a little premature to make this kind of a change that's going to put a burden, especially on the higher risk companies like contractors, who we deal with. But the NCCI felt like they needed to make that change. They put it off long enough, and if they were going to delay it anymore, it would only compound the problem.
Another question that kind of dovetails into that last one is, what can we think about the split point moving forward?
You know, another great question, Spencer, and that's really a concern for a lot of people. Because what happened when the Division of Insurance went ahead and approved the split point change the NCCI presented, they didn't just approve that change for this year, Spencer. This change is going to be ongoing from here on forward. And so what that means to our customers is that they're going to look at new split points this year and next year and the following year and on and on and on. In fact, the NCCI has already tentatively put out that next year in 2014, that split point is going to increase from the 10,000 that we just saw to 13.5, and then in 2015 it'll go to 15,000 beyond that, and each year beyond 2015 we're looking at continuing to see increases. But they haven't even looked that far in advance to see what those are going to look like yet.
So it sounds like we're in this for the long haul.
Absolutely. Unfortunately, unless the NCCI and the Division of Insurance look at repealing it for some reason, which to be honest we really don't anticipate, we're in for it. It's kind of keep happening year after year.
Well, we have time for one more question, if that's all right. What can our companies do proactively to be able to mitigate some of this moving forward?
You know, Spencer, there's a lot of things that we can do and be proactive as consumers here when it comes to your workers' comp. And again, so often I hear that workers' comp and experience mod, they are what they are and it should be the same for everybody. That's far from true. You know, at Network Insurance, we're very proactive with our customers. We don't just sit around waiting for that experience mod to come in and for it to be a mess, or for their policy rate to come in and say, well, I guess it is what it is, good luck next year. We're going to work every year and on a proactive basis to prevent those injuries from happening going forward and from ever walking in your door. Some of the unique things that we do at Network Insurance is we actually work with companies doing a pre-employment integrity testing, so we can screen out individuals who have high propensity for anger or theft or drug or alcohol, and certainly the sense of entitlement, which unfortunately has become so rampant in our workforce these days. Those employees feel like you owe them something as the employer, and we certainly don't want that to happen when it comes time for an injury. That's when those injuries get ugly. You know, another thing that we do, again, that is exclusive to Network Insurance Services, is we've contracted with CRT, Cost Reduction Technologies, and what that does is it's a pre-employment strength test. We want to make sure that those candidates that are coming through the front door have the physical strength to do that job without injuring themselves. Nobody wants to hire somebody else's problem or somebody with a pre-existing injury. Well, we're going to screen those folks out. So there are a lot of things that you can do, Spencer. Certainly, both when the claim occurs as it relates to modified duty and managing that claim, and then before those people even come through the front door and how your hiring practices work.
Great. I appreciate that, Nick, and I appreciate your time today. You've really helped to break down very complex issues into bite-sized pieces to help us to understand what effect this has on our businesses today and then what we might expect for the future. Thanks again for coming in.
Spencer, I really appreciate the opportunity today to talk to you and all of your customers. As you know, we've been partners with the IEC for at least 15 years. I've sat on the board. I've sat on so many committees over the years, and we certainly would appreciate the opportunity to work with you and your customers if you're interested in getting good information and being proactive as it relates to your insurance needs. Look forward to hearing from you. Give us a call at Network Insurance Services. You don't have to buy the insurance from us, but we're happy to work with you and give you the right information.
And thank you for tuning in today and listen more about this important topic. We here at IEC Rocky Mountain are here to serve our members every day of the week. We bring important information to be able to help make your businesses more profitable, more effective, and help to educate the workforce of tomorrow. If you have other questions regarding workers' comp insurance or any other issues that affect your businesses, feel free to reach out to us. Nick has already offered to be able to help you out on this issue, so feel free to reach out directly to him as well. Thank you.